Hello students, I hope everyone is preparing well for the upcoming examinations. Here I came up with one more video. In this video lecture, I am covering mock test paper of corporate and other laws for May 2024 examinations. As you all know, May 2024 is the first attempt under new scheme. So the questioning paper pattern has been changed. Previously, the questioning paper pattern of paper 2 corporate and other laws is question paper is for total 100 marks. Out of 100 marks, 30 marks objective questions, 70 marks descriptive questions. 30 marks objective questions, yes, you will be given multiple choice questions. Few multiple choice questions carry 2 marks and few multiple choice questions carry 1 mark. Coming to descriptive questions, yes, total you will find 5 questions. Out of 5 questions, question 1 is compulsory, no choice. Understood? So question 1 is for 19 marks. And remaining question 2 to question 5, yes, out of 4 questions, you have to attempt any 3 questions. Each question carries 17 marks. So total 51 marks from question 2 to question 5 and 19 marks question 1, 30 marks objective, total 100 marks. So this is a question paper pattern under old scheme. Now coming to new scheme, based on mock test paper, I prepared this. So based on mock test paper, here also 30 marks objective, 70 marks descriptive. Coming to multiple choice questions, each multiple choice question carries 2 marks. So total you will find 15 multiple choice questions. Each question carry 2 marks. If you select correct option, you will get 2 marks. If you select wrong option, 0 marks. For the time being, there is no negative marks. Is it clear? Now coming to descriptive questions, you will find total 6 questions. Out of 6 questions, question 1 is compulsory. Remaining question 2 to question 6, out of 5 questions, you have to attempt any 4 questions. Each question carries 14 marks. Each question carries 14 marks. So here you will find 14 into 4, some 56. And question 1, 14 marks. Objective, 30 marks. So total 100 marks. So descriptive 70 marks, objective 30 marks. So if you observe it carefully, the number of descriptive questions has been increased. Previously, you need to attempt 4 questions, out of which question number 1 is compulsory and 3 out of 4 questions you need to attempt. Coming to new scheme, question 1 is compulsory and you need to attempt 4 out of remaining 5 questions. So total 5 questions you have to answer. As you all know, each question carries 3 to 4 sub questions. Understood? And coming to the weightage, coming to the marks, so each question carries 2 to 5 marks. Are you all getting my point, students? See, don't think that a question will be asked for 14 marks. In each and every question, you will find sub questions. 3 to 4 sub questions you will find. And each sub question carries 2 to 5 marks. Is it clear, ma? Everyone. So with this, number of questions, descriptive questions has been increased. That means chances of getting questions from each and every topic is very, very high. So this is all about question paper pattern. Now let's continue our discussion with mock test paper. So mock test paper, 2 parts. Part 1, case scenario based multiple choice questions, 30 marks. And part 1 is compulsory, no choice. So here I'll continue with case scenario 1. Silver Private Limited was incorporated in 2016, having its registered office at Gurugram, Haryana. It is registered with an authorized share capital of 10 crores divided into 1 crore equity shares of 10 rupees each. Authorized share capital 10 crores, registered office situated in the state of Haryana. The paid up share capital of the company is 50 lakh rupee divided into 5 lakh equity shares of 10 each. The company is in manufacturing of rubber parts to be used in manufacturing of parts of passenger vehicles. Mr. Raj and Mr. Pawan are directors of the company. Mr. Siddharth, son of Mr. Raj, on January 8, 2022, had advanced a loan of 50 lakhs at an interest rate of 8% per annum. So this scenario is linked to acceptance of deposits. Now just look at the name of company one more time. Silver Private Limited. So this is a private company. This is a private company. Now who is advancing money to the company? Siddharth, son of Raj. Who is Raj? Director. Director son means relatives to the directors. Understood? Relative to director. So relative to director can advance money to the company, and that advance is not treated as deposit, provided at the time of advancing money, at the time of giving loan, he must furnish a written declaration stating that the advance or loan amount I am giving to the company is out of my savings, not out of borrowed funds or not out of loan funds. If these conditions are satisfied, then that advance from relative of the director is not treated as deposit. Yes, of course, I forgot to tell you one more condition. That another condition is board of directors has to disclose the details of loan amount from relatives of the directors in the board report. Understood? Everyone. So who is Mr. Siddharth? A relative to director. Advanced a loan of 50 lakhs at an interest rate of 8% per annum, and the loan is expected to be repaid after a period of 36 months. No problem. If it is a deposit, it should be repaid within 36 months. Since it is not a deposit, it can be repaid even after a period of 36 months. Clear? Silver Private Limited intends to accept deposits of 60 lakh from its members for the purpose of expansion of its business. The financial particulars of the company are as below mentioned. Paid up share capital 50 lakhs, free reserves 20, securities premium 10 lakhs, borrowings from bank 65 lakhs, turnover 2 crores. As on date of acceptance of deposits, the company has not defaulted in repayment of borrowings along with interest thereon. The company secretary of the company informed the board of directors of the company that they need to appoint an internal auditor for audit of the company. Private limited company, applicability of internal audit. Come on, tell me the limits. Tell me the limits. Turnover in the preceding financial year is greater than or equal to 200 crores. Coming to the loans and advances, total borrowings from public financial institutions, banks, how much it is? 100 crores or more at any point of time during the preceding financial year. Now, looking at the financial particulars, the turnover is 2 crores. It's not 200 crores. So, turnover is within the limits. Understood. Next, borrowings from banks, 65 lakhs. How much it is? 65 lakhs. It is also within the limits only. So, therefore, internal audit is not applicable. Are you all getting my point, students? Is internal audit applicable or not applicable? Not applicable. Why? For private limited companies, the limits are turnover 200 crores or more, loans, total borrowings 100 crores or more at any point of time during the preceding financial year. Yes or no? Next, the board stated that statutory auditor is already performing audit function and there is no need to appoint internal auditor as it causes additional burden on the company. The company requires funds for the purpose of meeting working capital requirements. The company has approached the bank for meeting working capital requirements and has availed a loan of 65 lakhs from bank. The loan is secured by the personal guarantee of the directors of the company. So secured loan. Now for security, what they did? They provided guarantee. Who? Directors of the company gave a personal guarantee. Understood? That means none of the assets of the company were charged. None of the assets of the company were provided as a guarantee. Is it clear? So loan is secured by the personal guarantee of the directors of the company. On the basis of above facts and by applying applicable provisions of Companies Act 2013 and applicable rules therein, choose the correct answer. 1 out of the 4 of the following multiple choice questions, MCQs 1 to 5 given here and there under. Herein under. With respect to loan advances by Mr. Siddharth to Silver Private Limited, whether the same can be classified as deposit or not. Already I discussed with you. It is not treated as deposit provided he has furnished a written declaration and the same has been disclosed in the board report. If these two conditions are satisfied, then it is not at all treated as deposit. So answer, first option, it will be treated as deposit as the loan is advanced by Siddharth, who is neither director nor shareholder of the company. Wrong option. It will be treated as a deposit as the loan is given by relative of the director. In a private company, yes, company can obtain borrowings, company can obtain loans from relative of the directors. So not an issue. Wrong option. It is not treated as deposit actually. It will not be treated as deposit as Mr. Siddharth has given loan to company at an interest rate of 8% per annum. This is not a correct point at all. First of all, there is no debar, or there is no restriction on interest rate. There is no condition with respect to interest rate. So wrong option. It will not be treated as deposit. It will not be treated as deposit if Mr. Siddharth, if it is nothing but assumption, if Mr. Siddharth gives a written declaration to the effect that loan is advanced by him from his sources of funds, not from borrowings or not from accepting loans or deposits from others, and company shall disclose the details of money so accepted in the board report. If these two conditions are satisfied, then it is not treated as deposit. So the correct option is option D. Understood? Next, with respect to acceptance of deposits from members, which of the mentioned statement is correct? So we need to identify the correct statement out of the four following options. Silver Private Limited cannot accept deposits of more than paid up share capital, which is 50 lakhs. No, actually, coming to the limits of deposits, company can accept deposits to the extent of 35% of paid up share capital, free reserves, securities premium. However, this limit is not applicable to private companies. Private companies can accept deposits up to 100% of paid up share capital plus free reserves plus securities premium. And few private companies, which are treated as startups, or a company whose borrowings does not exceed twice of its paid up share capital or 50 crores, whichever is less, and a company which has not defaulted in repayment of those borrowings and payment of interest on those borrowings, such private companies can accept deposits even without limit. So these exceptions are you have to remember while answering this question. So let's see the correct option. Option A is not a correct. Option A is not correct option. Option B. Silver Private Limited can accept deposits of 60 lakh from members as it is less than twice of its paid up share capital or 50 crores, whichever is less. Correct option only. Let's see remaining two options. Silver Private Limited cannot accept deposits of more than higher of aggregate of paid up share capital and free reserves, which is 70 lakhs, and borrowings, which is 65 lakhs. There is no such restriction. Silver Private Limited cannot accept deposits of more than aggregate of paid up share capital and free reserves, which is 70 lakhs. This is also not a correct option. This is also not a correct option. Here the proposal of accepting deposits is how much? So how much is what is the proposal, ma? 60 lakhs, right? 60 lakhs from its members. Paid up share capital plus free reserves is 70 lakhs. It is within the limits only. But the correct option is option B. Option B is the correct option. You can see here twice of its paid up share capital. Twice of its paid up share capital. 2 times of paid up share capital. 2 into 50 lakhs. That is 1 crore. If you observe total borrowings is 65 lakhs. That is within the limits of twice of its paid up share capital. And they clearly mention that company has not defaulted in repayment of borrowings along with interest thereon. And one more condition is there. The company should be neither associate nor subsidiary to another company. So any private limited company satisfying these three conditions. One is total borrowings less than twice of its paid up share capital or 50 crores, whichever is less. And second one is neither subsidiary nor associate company to others. And third one, the company has not defaulted in repayment of borrowings along with interest thereof. If these three conditions are satisfied, then such private company can accept deposits even without limit. So accordingly, option B is the correct answer. Everyone. Next. Option B is the correct answer. One small modification. Here the word as its borrowings is the most relevant option right now. Next one. Question 3. Is Silver Private Limited required to appoint internal auditor in accordance with the provisions of Companies Act 2013? Answer is no. Answer is no. Silver Private Limited is not required to appoint internal auditor, as private companies are not required to appoint internal auditor. Wrong option. Private companies are also covered under internal audit if turnover has crossed 200 crores, if turnover is equal to 200 crores. Next, loans and advances from the banks, public financial institutions equal to 100 crores or more, then internal audit is mandatory even for private companies. Silver Private Limited is required to appoint internal auditor. Wrong option. Silver Private Limited is required to appoint internal auditor as aggregate of paid up share capital plus free reserves and securities premium is more than prescribed limit. Wrong option. There is no such restriction. Next, Silver Private Limited is not required to appoint internal auditor as turnover is less than the prescribed limit. So option D is the correct option. Question 4. Which of the following statements is correct in respect of loan of 65 lakhs availed by the company? Silver Private Limited needs to create a charge and register charge within 30 days from date of sanction of loan. Here, none of the assets of company were charged for getting the loan of 65 lakhs. Understood? So option A is incorrect. Silver Private Limited is not required to create and register charge as loan is against personal guarantee of the directors. Correct. Silver Private Limited needs to create and register charge within 15 days. Wrong option. Silver Private Limited needs to create and register charge within 60 days. Wrong option. Time point of view, 30 days is the correct option. Time point of view, 30 days from creation of charge. Yes, company has to register charge with ROC. But here, none of the assets of the company were charged, so registration of charge is not required. Accordingly, option B is correct answer. Clear, everyone? Next, fifth MCQ. The management of Silver Private Limited for ease of doing business and reduce compliance burden proposed it to be registered as small company. Within the provided information and legal requirements under Companies Act 2013, recommend on the validity of the said proposal. So whether the proposal is valid or not. Let's see. Proposal is valid as any private limited company can apply for status of small company. Wrong option. Why? All private limited companies are not treated as small companies. Only the private company whose paid up share capital is less than or equal to 4 crores, whose turnover is less than or equal to 40 crores can avail the status of small company. Understood? Not all private companies can avail the status of small company. Option A is wrong. Proposal is invalid as Silver Private Limited is not fulfilling the requirement of turnover of 400 crores. Wrong option. It is a small company, first of all. Proposal is valid as Silver Private Limited is fulfilling the requirement of both paid up share capital and turnover, which is within the prescribed limit. So option C is correct. Proposal is invalid as Silver Private Limited is fulfilling the requirement of paid up share capital alone. So this is also wrong option. So the correct option is option C. Clear? Next one. Financial particulars of ABC Limited in respect of immediately preceding financial year are as under. Net worth 280 crores, turnover 550 crores, net profit 5.5 crores and borrowings 60 crores. Choose the correct option in terms that whether the provisions of corporate social responsibility are applicable to ABC Limited or not. Yes, applicable. Why? Net profit, it is exceeding the limit of 5 crores. It is more than the limit of 5 crores. Turnover, net worth, they are within the limits. Turnover and net worth, they are within the limits of 1000 crores, 500 crores. But the point is net profit exceeded 5 crores. So what section 135 is telling us? Section 135, according to section 135, if company's net worth or turnover or net profit exceeds the specified limits or equal to the specified limits, then CSR provisions are applicable. Understood? So in the given question, net profit, it is more than 5 crores. So CSR provisions are applicable. So come on, let's select the correct option. No, as ABC Limited is having a net worth of 250, more than 250 crores in the immediately preceding financial year. Wrong option. Yes, as ABC Limited is having turnover of more than 500 crores. What is the limit of turnover? 1000 crores, right? Wrong option. Yes, as ABC Limited is having net profit of more than 5 crores in the immediately preceding financial year. C is the correct option. Are loans and borrowings, there is no such condition at all. Condition, net profit, turnover, net worth. Understood? And sometimes students get confusion. What they think? All the three conditions should be satisfied, then only section 135 is applicable. No, it is wrong. Any of these three conditions, if any of these three conditions are satisfied, any one of these three conditions is satisfied, then section 135 is applicable. Is it clear? Everyone. Okay, next. Question 7. Under what circumstances is the requirement for constituting CSR committee waived? CSR committee waived, and who is responsible for discharging the functions of CSR committee in such cases? The expenses, the company is having a responsibility to spend amount on CSR activities if it is not exceeding 50 lakhs. In that case, CSR committee is not required. In that case, CSR committee is not required. Exceeding 50 lakhs, CSR expenditure exceeding 50 lakhs compulsorily required. When the amount to be spent by a company does not exceed 50 lakh rupees, then the board of directors assumes the responsibility of CSR committee functions. So option A is correct. Option A is correct. Clear, everyone? Next, case scenario 2. Vidya Masterminds LLP was incorporated on 15th April 2023. Sagar, Manthan, Vishnu, Vasuki were partners in the firm. Sagar and Manthan were also designated partners in this firm. The firm was incorporated with the object of manufacturing and trading of cycles. The business was going too smoothly. But on 30th April 2023, Mr. Vidyaram filed an application to registrar that he has a registered trademark in the name of Vidya Masters. When LLP was incorporated, 15th April 2023, and the name of LLP is similar to the name of registered trademark. In that case, the owner of registered trademark can file an application with the registrar, with the central government. And what is the time limit for filing that application? 3 years actually. Now, if you look at the case scenario, within 15 days, this fellow filed an application showing that he is having a registered trademark in the name of Vidya Masters, which he has got registered before 15th April 2023 itself. Therefore, LLP Vidya Masterminds LLP should change its name. Infringement of trademark, nothing but. On the basis of basic investigation, a registrar found that Mr. Vidyaram was correct in the contention. The registrar sent a direction to Vidya Masterminds LLP to change its name as it too nearly resembles with the trademark of Mr. Vidyaram, that is Vidya Masters. The notice was issued by the registrar on 5th May 2023. So what is the date of issue of notice? Come on, tell me, what is the date of issue of notice? 5th May 2023. So date of direction is 5th May 2023 by post. But due to some internal problem of postal department, notice reached the LLP on 10th May 2023. Here date of receipt of notice is irrelevant. Date of issue of notice is required. So what is the relevant date? Date of issue. Date of issue of notice. Date of receipt of notice is not relevant. Vidya Masterminds LLP ignored the notice and continued working under the same name. On 15th August 2023, why 3 months completed? By the time, 3 months completed. So what government did, what registrar did? The registrar suo moto allotted the LLP a new name, Sahitya Masterminds LLP. So within 3 months of direction, LLP has to change its name. So LLP ignored the notice. Now registrar is having a power to change the name of LLP. Of course, powers of central government already delegated to registrar. Is it clear? And entered the new name in the register of LLP and also issued a fresh certificate of incorporation to Vidya Masterminds LLP with new name. Vidya Masterminds LLP, now Sahitya Masterminds LLP, was not comfortable with new name. It started the process to change the name allotted by the registrar. Fine. Meanwhile, Vishnu was appointed as designated partner in Vidya Masterminds LLP on 25th July 2023. But this information was not sent to the registrar. On 20th June 2023, Mr. Vasuki had given a written notice to LLP that he could not continue as partner in LLP with effect from 22nd July 2023. Not less than 30 days notice shall be given to LLP. Not less than 30 days notice shall be given to LLP about his intention not to continue with LLP. So notice has been served within that time limit, no problem. This decision from the LLP was also not informed by either LLP or Mr. Vasuki to the registrar. Now, what is the effect? What is the effect, ma? In case of non-filing of information with ROC, the retired partner, the outgoing partner, the former partner is not treated as former partner. He is still continued to be partner of LLP. Accordingly, he is liable as long as he is a partner of LLP. Understood? See, his liability comes to an end only when intimation is given to registrar. If LLP fails to intimate registrar, then the retiring partner, the former partner, has to file an intimation with the registrar. The registrar will give notice to LLP based on response of LLP. Sometimes on suo moto, if there is no response from LLP, registrar is having power to register the termination. So here in this case, LLP as well as former partner failed to inform registrar. On the basis of above facts and by applying applicable provisions of LLP Act 2008 and applicable rules therein, choose the correct answer of the following MCQs given here and under. So 3 MCQs. 8th one. When the registrar directed Vidya Masterminds LLP to change its name, by which date LLP should have changed the name of LLP? So here the correct option is, so let's decide. Option A, by 5th August 2023, that is within a period of 3 months from the date of issue of such direction by registrar. 3 months everyone know, but 3 months from date of issue of direction or 3 months from the date of receiving of such a direction. Here students will confuse. Students will confuse between A and B points. Option C, option D, straight away wrong options. By any time, wrong option. Vidya Masterminds LLP is not liable to change its name, wrong option. Now students will face confusion between A and B. What provision is telling? 3 months from date of issue. 3 months from date of issue. So option A is correct answer. Option B is wrong answer. A small point. If you are able to remember that small point, 2 marks yours or else 0. Understood? So periodical revision, regular revision of the concepts is very much required, or else we can't score good marks. Getting my point, students? Everyone, come on. Next, 9th MCQ. Vishnu was appointed as designated partner in Vidya Masterminds LLP on 25th July 2023. By what time limit the LLP should have informed the registrar? 30 days. Within 30 days of consent from the designated partner and appointment of the designated partner, LLP has to inform registrar. So 25th July. In July, total 31 days are there. 31 days are there. So 31 minus 25, 6 days. So 6 days left in July. Add 24 days in August. So by 24th August 2023, that is within 30 days of appointment, LLP should inform the registrar. Clear? 25th July plus 30 days, 24th August. Whether Mr. Vasuki will be liable for penalty for not intimating the registrar about the appointment of Vishnu as designated partner. So here the intention of the examiner is, Vasuki retired by giving notice, and that notice has not been filed with the registrar. Neither LLP nor Vasuki informed the registrar regarding termination of partnership interest, regarding termination of partner's interest. Now, whether former partner is liable or not liable, the answer is till intimation, till you register intimation with the registrar, you are liable. So select the correct option. No, as he was not partner on the date of appointment of designated partner. Who told? He is a partner only. Sir, he gave resignation, sir. He gave resignation letter, but the resignation letter has not been registered with ROC, right? Yes, as former partner is to be regarded still being a partner of LLP unless a notice has been delivered to registrar by former partner or LLP. Next one, yes, even if a notice has been delivered to registrar by LLP about his retirement. If notice has been delivered to registrar about his retirement, then he is not liable for any act. In case of contravention of provisions of LLP, sometimes designated partner and sometimes partner of LLP are also held liable. Understood? No, in any case, Vasuki will not be liable. So wrong option. These 3 are wrong options. So option B is correct option. Next, case scenario 3. Tech Inspiration Private Limited was incorporated on 30th June 2018. The main object of company was to provide guidance classes for engineering aspirants. For this purpose, they opened a coaching center at Freedom Plaza near Bhagwan Talkies, Bypass Road, Agra. The premises was owned by the company. The company also made an employee appointment committee for the systematic selection and appointment of employees, including faculties for teaching. In the first slab, committee appointed 9 teachers and 3 clerical staff and 1 peon. For the purpose of expansion of business activities, company decided to open a branch of the company at nearby city of Agra. After the due research, the company decided to open its branch at city Bharatpur, which was just 50 kilometers far away from Agra. The company approached Mr. Raghuram Meena, owner of land at Bharatpur, suitable for company. Mr. Raghuram Meena leased his land for 10 years to Tech Inspiration Private Limited. The land has a small temple of Lord Ganapati at its center. The company constructed the classrooms on the land and many students joined the coaching classes. Besides it, the temple generated some income in the form of donations. Now, Mr. Raghuram Meena claimed the income of temple with the contention that he had leased only the land and not the temple. See, he had given land on lease basis. So land is an immovable property. Now things attached to the land, benefits arising out of such lands, they will also comes under immovable property. They will also comes under immovable property. Now leasing land alone, not leasing temple, it is not a correct point. It is not a correct statement first of all. And you are leasing something, things attached to that thing also gets leased. Are you all getting my point, students? Everyone, buildings, temples, what are all the things attached to the land becomes immovable property. You can lease immovable property. You can lease entire immovable property. Understood? Now the claim of Raghuram is actually not tenable. Let's see. Further, one more problem arose in the company. Employee appointment committee found that one of the faculties, Mr. Nitesh Gupta, was not performing well. He was not justifying his duties. Therefore, employee appointment committee decided to terminate him with effect from 31st January 2024 and send him the notice of termination by properly addressing and by registered post to Mr. Nitesh Gupta. Nitesh Gupta refused to accept the notice. It is irrelevant here. Company, committee sent a notice to him. Whether he accept it or whether he reject it, it is immaterial. Here, service of notice is valid. Service of notice is valid if it is properly addressed and the stamps properly paid. For stamps, properly payment should be done and it should be sent by registered post. Then we call it as proper service of notice. It is irrelevant whether it reaches the recipient or not, whether recipient accepted it or rejected it. After 2 months, on 1st April 2024, Mr. Nitesh Gupta filed a suit against company for claiming the salary for the period from 1st January to 31st March 2024. With a view of his appointment can't be terminated because of 2 reasons. One, employee appointment committee was established just to appoint employees. The committee is having power only to appoint the employees, not to terminate. General Clauses Act, power to appoint includes power to suspend, power to dismiss, power to terminate. Okay, next. Mr. Nitish Gupta refused to accept the notice of termination with the contention that it was not properly served. So, 2 statements of Mr. Nitish Gupta not at all tenable. Why? First one, power to appoint includes power to remove. Next point, properly service of notice, it depends on 3 conditions: properly addressed, stamps properly paid, and sent through registered post. If these conditions are satisfied, it is assumed that notice is served properly. On the basis of above facts and by applying provisions of LLP Act 2008 and applicable rules therein, choose the correct answer 1 out of 4 of the following MCQs 11 to 13 herein under. Only 3 MCQs. Whether Mr. Raghuram Meena is correct in his claim, whether he may claim the income of temple, option is no. The answer is no. So no, immovable property in terms of General Clauses Act 1897 includes land, benefits to arise out of land, and things attached to the earth or permanently fastened to anything attached to the earth. So benefits attached to the land and income from temple will be Tech Inspiration Private Limited. Option C is correct answer. Next, whether employee appointment committee may terminate Mr. Nitish Gupta, even the authority letter given to employee appointment committee has no specific clause authorizing it for termination of employees. Again, the contention of Nitish Gupta is wrong. Why? Power to appoint includes power to suspend, power to terminate. So come on, select the correct option, option B. Yes, because section 16 of the General Clauses Act 1897 provides that unless a different intention appears, power to appoint to include power to suspend, power to dismiss. So option B is correct answer. Next, whether the refusal to accept the notice sent by post by Mr. Nitish Gupta would be termed as not serving of notice of termination. So let's see the option, Yes, as Nitish Gupta had not accepted the notice. Wrong option. Yes, refusal to accept the post will always be considered as not served. Wrong option. No, because as per section 27 of General Clauses Act 1897, the service by post shall be deemed to be effected by properly addressing, prepaying, and posting by registered post. C is the correct option. So with this, the case scenario, they're asking about LLP. They're asking you to apply the provisions of limited liability partnership. But the questions are related to General Clauses Act. So some clerical errors happened. So don't consider this paragraph. Some clerical errors are there. The question is about private limited company. And multiple choice questions, in multiple choice questions, they're asking General Clauses Act 1897 provisions. So it's not LLP Act, it's General Clauses Act 1897. Next, 14 and 15 MCQs. Mr. Amar, a resident individual, wants to remit 60,000 USD to his son in the USA after winning a big lottery. Remittances out of winnings from lottery. Remittances out of winnings from lottery to outside India is a prohibited current account transaction. You are not permitted to withdraw USD to carry prohibited current account transactions. Come on, select the correct option. Visit a local bank. Wrong. Cannot remit the said amount as remittance out of lottery winnings is prohibited. B is the correct option. B is the correct option. Next. Mr. Prakar, an Indian resident individual, wishes to obtain foreign exchange for a gift remittance totaling 50,000 USD. Which of the following statements accurately reflects the regulatory requirement under FEMA? Mr. Prakar can freely remit 50,000 USD for the gift as it is a current account transaction and the amount of gift remittance is less than 2.5 lakh USD. So under LRS, liberalized remittance scheme, this option is correct. Mr. Prakar must seek prior approval from RBI. No. Gift remittance, it's a current account transaction. The reason I'll tell you. The reason is capital account transaction is a transaction which alters residents' assets, liabilities, including contingent liabilities outside India. Outside India. Or non-residents' assets, liabilities in India. Now, when I'm gifting, when someone is gifting 50,000 USD outside India, it is neither creating asset nor creating any liability. It is neither creating asset nor creating liability. Therefore, it is not at all a capital account transaction in the given situation. So, it's a current account transaction. And if it is within the limits of LRS, then RBI prior approval is not required. And gift is there under, RBI approval list. Gift for gifts. Generally, RBI approval is required in case of remittances exceeding 2.5 USD. This limit is per person per financial year for carrying all the transactions in foreign currency. Clear? So option A is correct answer. Option C, Mr. Prakar must seek prior approval from RBI for any gift remittance. No. Mr. Prakar does not need to comply with any FEMA requirements as gift remittance does not fall under purview of FEMA. This is also wrong option. Resident entering in foreign currency transaction either in India or outside India. Non-resident entering in foreign currency transaction in India. To these transactions, provisions of FEMA 1999 shall apply. Understood? Accordingly, option D is not correct. So, correct option is option A. So, with this, I think everyone understood the depth of concepts they are asking in the examination. Are you all getting my point, students? Only with conceptual clarity you can answer these multiple choice questions, or else you may end up by getting some 10 to 15 marks from objective category. Each and every question is next level question. Are you all getting my point? Even a small point is very, very important. So you have to understand concept thoroughly and you have to remember the concept. Once you understand the concept, by product you will remember the concept. See, while preparing, your main objective should be understanding the concept, not remembering the concept. If you understand the concept, inherently you will remember the concept. Trust me. Inherently, you'll remember the concept. So, remembering the concept should be a byproduct. Should be your byproduct, not it should be main product. What is the main product? Understanding the concept. After reading this mock test paper, I think many of you should get this clarity. Okay, next part 2, descriptive questions. Not much time required, ma. Some of these questions are directly, direct questions, and some of the questions are practical questions. So let's see one by one. The information extracted from the audited financial statements of Resolution Private Limited as on 31st March 2023 is as given below. So it's a private limited company. First of all, paid up share capital 50 lakhs, turnover 2 crores. It is further understood that LO Limited, which is a public limited company, is holding 2 lakh equity shares. 2 lakh out of 5 lakhs means 40 percentage. So what is the percentage of share capital, public company is holding? 40%. Therefore, Resolution Private Limited is not a subsidiary to public company. It is not a subsidiary to public company. In order to call someone as a subsidiary, other company should have more than half of total voting power. More than half, that means more than 50%. Here the holding is just 40%, so it is not a subsidiary. Next one, Resolution Private Limited has filed its financial statements for the said year with the Registrar of Companies, excluding the cash flow statement, within the prescribed time limit during the financial year 2023-24. ROC has issued a notice to Resolution Private Limited as it has failed to file the cash flow statement along with balance sheet and profit and loss account. You are to advise on the following points explaining the provisions of the Companies Act 2013. Whether Resolution Private Limited shall be deemed to be a small company whose significant equity shares are held by public companies. Significant means, at least to 20%. At least 20%. If you look at the provision of small company, holding companies, subsidiary companies, Section 8 companies, statutory companies are excluded from the scope of small company. Resolution Private Limited is not a subsidiary. It's not a subsidiary. Why? The holding of LO Limited is just 40%. It's not more than 50%. Therefore, it is not a subsidiary. Therefore, it is a small company. Why? Turnover, paid up share capital, both are within the limits only. Private company, turnover, paid up share capital within the limits, and it is not a subsidiary to another company. Therefore, it is a small company. So answer, yes, it is a small company. Whether Resolution Private Limited has defaulted in filing its financial statements? No. Small companies are exempted from preparing cash flow statements. So here the argument of ROC is not tenable. The argument of ROC is not tenable. So there is no default. So while writing the answer, first you need to write the provision of small company. Next, analysis. Link the characters in the question with provision. Conclusion. Yes, no. That's it. That's it. You'll definitely get 5 out of 5 marks. Next, the balance extracted from the financial statements of Pacific Limited or as below. Net worth 100 crores. Okay, so 2 points of time. 2 dates were given here. One is audited financial statements, preceding financial year audited financial statements. The other one is half year but provisional financial statements. So net worth 100 crores, 100 crores, turnover 500, and in this case 1000 crores. So limit applied here. Net profit preceding year 1 crore and the current year up to 30th September 2023 5 crores. Now if you check these figures, they are within the limits of CSR applicability norms. If you check these amounts, so 2 amounts they satisfied the conditions of CSR applicability norms. Now the point is, which point are for applying CSR provisions, which time period figures we have to consider? Preceding financial year figures or current financial year figures? The answer is preceding financial year audited financial statement figures. Accordingly, for financial year 2023-24, CSR is not applicable. Sir, current year we have crossed the limits. No, sir. Okay, CSR is applicable from the next year onwards, not in the current year. Every year you have to check preceding financial year audited financial statements figures. Is it clear, everyone? So, examining the provisions of Companies Act 2013, you are requested to examine whether Pacific Limited is required to constitute CSR committee during the second half of the financial year. Answer is no. They're required to constitute committee in the financial year 24-25, not second half of financial year 23-24. So 3 marks simple question. First two questions are past examination questions, but these two questions came very recently. Next, Smart Limited declared dividend at its AGM held on 31st July 2023. The dividend warrant to Mr. A shareholder, was posted on 22nd August 2023. That is within the time limit of 30 days. 30 days from the date of declaring dividends warrants were posted. Due to postal delay, which is not within the hands of company, which is not within the control of the company, this is something beyond the control of company. Okay, due to postal delay, Mr. A received the warrant on 5th September 2023 and encashed it subsequently. Can Mr. A initiate action against company for failure to distribute the dividend within 30 days of declaration under the provisions of Companies Act 2013? The answer is no. Why? Section 127 general rule, company is liable for punishment. Directors, officers in default are also liable to punishment. But the point, this particular situation is falling under exceptions. Under exceptions, we had a point. In case of delay, if the delay happened not within the control of company is not responsible for such a delay. In that case, company officers are not subject to punishment. So here, company will not get any punishment. Company is not required to pay any interest. Clear? So 2 marks, simple question. Next, Mr. Pravesh, an Indian national, desires to obtain foreign exchange for the following purposes. One is studies abroad, US dollar 1,40,000 for studies abroad on the basis of estimates given by the foreign university. Since it is within the limits, within the limits specified under LRS, liberalized remittance scheme. So no permission is required. He can obtain foreign exchange. Next, US dollars 10,000 for remittance towards hiring charges of transponders. In this case, central government prior approval is required. Central government prior approval is required. Hiring charges of transponders for this transaction. So central government prior approval is compulsory. Yeah, you can see answers also simultaneously. First, you need to evaluate whether you are able to answer the questions or not. Once you got clarity, yes, we can answer it. Then you have to check suggested answers. Why? The reason is the presentation matters. Whether you know the answer or not is not a criteria for getting full marks. Presentation. First, provision, analysis, conclusion. So for presentation matters, you have to check the suggested answers too. Are you all getting my point, students? In the second case, yes, current account transaction, Parvesh is required to take approval of central government for drawal of foreign exchange for remittance of higher charges of transponders. In the above case, 1,40,000, since it is within the limits, RBI prior approval is not required. RBI prior approval is not required. Both of them are current account transactions only, not capital account transaction. One falls under RBI category, other falls under central government category. So 4 marks, simple question ma. Next one, Samyak Limited is a company engaged in business of manufacturing papers. Kindly explain the provisions relating to quorum. So what is the company ma? It's a public limited company. Public limited company, the quorum limits are, in case company having 1,000 members, or less than or equal to 1,000 members, applicable quorum is 5 members personally present. 1,001 to 5,000, 15 members personally present. 5,001 and above, 30 members personally present shall constitute quorum. If you write this much answer, you'll get 2.5 marks for sure. You won't get 5 marks. Why? Or you need to write one more point. The point is, or such other number mentioned in AOA. Now, number mentioned in AOA as quorum or statutory limit, whichever is higher, you have to follow. Let's see the answer. here itself. See, 5 in case of number of members in the register of members is less than or equal to 1000. 15, so in case of more than 1000, more than 1000 means 1001 and above 5000. 30 members in case company having number of members exceeds 5000, exceeds 5000 means 5001 and above. 5000 already covered in second category. Okay, shall be the quorum for a meeting. The term members personally present as mentioned above refers to members entitled to vote in respect of items of business on the agenda of the meeting. And I told you, right, articles of the company. So this one point will carry equal weightage, if you forget to write this highlighted matter, you'll end up with getting just 50% of marks. That's it. This highlighted matter is also very, very important. Clear? Next question. The offer of buyback its own shares by a company shall not be made within a period of 6 months from the date of closure of preceding offer of buyback. Exactly wrong. The time gap should be 1 year. Preceding buyback completion date, proposed buyback. The time period between these two events should be minimum 12 months. If any, and cooling period to make further issue of same kind of shares, including allotment of further shares, shall be period of 1 year from the completion of buyback. Again wrong. Cooling period is for 6 months only, subject to certain exceptions. Examine the validity of this statement by explaining the provisions of Companies Act 2013 in this regard. So two statements wrong. You need to correct it. First, you need to write the provision and you need to write the conclusion. Clear? Next, Mr. Rachit purchased a new house and after some time he shifted to new house. He was regularly filing his income tax returns, but he did not update his new address with IT department. The income tax department sent a notice, show cause notice, to Mr. Rachit, whereby the time limit for reply was 15 days from service of notice. The notice was properly sent by registered post to his address, which was in the records of income tax department. The notice reached at old house and present owner of the house refused to accept that notice. After a certain period, the income tax department took a penal action against Mr. Rachit. He requested the department that he should not be charged as he did not receive the said notice. First of all, he should update his address. He should update his address in the income tax department. He failed to update the address. Now, how can he blame income tax department? How can he blame income tax department, or how can he request income tax department, not to charge not to charge penalty? Getting my point, students? So advise in terms of provisions of General Clauses Act 1897 whether sending of show cause notice by IT department would be considered as proper service of notice or not. Three conditions. If three conditions are satisfied, it is said to be proper notice, proper service of notice. Properly addressed, prepaid stamp charges, sent through registered post. If these three conditions are satisfied, then that notice, service of notice, is valid. It is immaterial whether he updated the address or whether he accepted the notice or whether he refused the notice. Who? Recipient. Clear? Next, explain the provisions of Companies Act 2013 relating to service of documents on a company and the members of company. So this is section 20, straight away, direct theory question. Direct theory question, section 20 for 5 marks. Direct theory question. Next, promoters of J Limited contributed in the shape of unsecured loan to the company in fulfillment of margin money requirements stipulated by State Industries Development Corporation Limited for granting loan. In the light of provisions of Companies Act 2013 and rules made thereunder, whether the unsecured loan will be regarded as deposit or not. So who is giving this unsecured loan? Promoter. Why he is giving unsecured loan? Because a condition was imposed by lender. State Industries Development Corporation Limited imposed a condition: we will give you loan, but before that, promoters should give unsecured loan. So now, promoters giving unsecured loan based on the condition, based on the stipulation by a lender, that corporation limited. In that case, the loan amount, the advance amount received by the company from promoters is not to be treated as deposit. Until when, sir? Until the repayment of loan to the lender. Once company repay loan to State Industry Development Corporation Limited, at the same point of time, company has to return unsecured loan to the promoters. till the date of prepayment, it is not treated as deposit. Till the date of repayment to the lender, unsecured loan from promoter is not treated as deposit. Next, explain the impact of two words. Means includes. Means restrictive definition, includes the inclusive definition. Means comes under exhaustive definition category, includes comes under inclusive extensive category. So this is also straight away theory question, 4 marks. Interpretation of statutes, huh? Right. The Companies Act 2013 has prescribed an additional duty on the board of directors to include in board report a director's responsibility statement. Briefly mention any 4 matters to be furnished in the said statement. So this is also direct theory question. So director responsibility statement, there are some 6 points are there. You need to write 4 matters. So you can see here, this is also direct theory question, ma. Okay, 6 points are there. Out of 6 points, write any 4 points. It's better if you write all the points. Okay, the question is for 5 marks, right? So write all the points. Next, Mohan and Rakul are college friends and intend to do trading in musical instruments. They have met Mr. John and Miss Kate, who are non-resident Indians, and they all have decided to form LLP under the name and style of Mohan John LLP with an initial capital contribution of 1 lakh each. LLP was incorporated on October 15, 2020. LLP intends to appoint John and Kate as designated partners. But if you look at the question carefully, John and Kate are non-resident Indians. Both are non-resident Indians. None of them, at least one of them should be resident, right? So appointment of non-residents as designated partners, all non-residents as designated partners, not tenable. Not tenable. You can look at the answer. In the given case, Mohan John LLP intends to appoint Mr. John Kate as the designated partners. This is not in accordance with the provisions of LLP Act. At least one of the designated partners should be resident in India, right? Everyone. So designated partner, who can act as designated partner? Individual. How many designated partners how many designated partners LLP should have? Minimum 2. Out of 2, 1 should be resident in India. 5 marks, a simple question. Just look at the answer. Only 2 paragraphs. Only 2 paragraphs. Small answer. You need to remember this provision and you need to write this conclusion. That's it. 5 marks in your hands. Next, in what way are the following terms considered as external aid in interpretation of statutes? Historical setting, use of foreign decisions. So direct theory question from interpretation of statutes. So write those points. Next one, last question. LLP is an alternative. I'm sorry. No. Last but one question. LLP is an alternative corporate business form that gives the benefit of limited liability of a company and the flexibility of a partnership. Explain. So this is also a direct theory question. Basic question. My first question of LLP chapter. Basic question. So it is having the benefits of both company as well as partnership. In case of company, limited liability. In case of partnership, flexibility of management. Understood? So small question. And the question is for 5 marks. Question is for 5 marks. Next one. ABC and Associates, a firm of chartered accountants, was reappointed as auditor at AGM held on 30th September 2022. However, Board of Directors recommended to remove them before expiry of the term by passing a resolution in the board meeting held on 31st March 2023. Subsequently, having given consideration to the board recommendation, ABC and Associates were removed at AGM by passing a special resolution but without obtaining approval of central government. What is the procedure? First, board resolution, next approval from CG, last step special resolution from members. Understood? So this is the procedure company has to follow for removing the auditor before expiry of the term. So board resolution is there, special resolution is there, but in between CG approval is not there. Sir, can I get central government approval after members approval? No. You have to get approval of central government before getting approval from members. So this removal is not at all a valid removal. And this is a past examination question. A confusion regarding meaning of financial year arose among the financial executive and accountant of a company. Both were having different arguments regarding meaning of financial year and calendar year. So General Clauses Act question, financial year starts from 1st April, calendar year starts from 1st January. Simple question. Calendar year definition, financial year definition, 2 marks each. The difference. What is a floating charge? When does it gets crystallized? Right away theory question. When charge is created on the assets which are in the nature of fluctuating, which are fluctuating in nature, floating in nature. Stock, debtors, understood, comes under floating charge. Land and building, particular asset, fixed charge. In case of floating charge, charge is extended, charge is extended to future assets also. Charge doesn't covers only present assets, it also covers future assets. And when does it gets crystallized? Crystallized means converted floating charge into fixed charge. The effect of crystallization is floating charge gets converted into fixed charge. So you need to mention the circumstances or situations when floating charge gets converted into fixed charge. Next one, discuss the provisions of Companies Act 2013 regarding the time limit for holding its first AGM of the company. So 9 months from the closure of first financial year, right? If you write that point, you'll get 1 mark. You have to write complete answer. So when the first financial year gets completed, from that you need to add 9 months. So that is the due date for conducting first AGM. If company conducts first AGM according to the provisions of Companies Act, then company is not required to conduct AGM in the year of incorporation. In the year of incorporation, no need to have AGM. Also state the power of registrar to grant extension of time for the first AGM. Explain with the help of an example. The ROC is having a power to extend AGM, not first AGM, but subsequent AGM. He's having power to extend a date of AGM by 3 months for a valid reason shown to him. But this power he can exercise only for subsequent AGMs, not with respect to first AGM. Is it clear? Example, just write, A limited company, date of incorporation, year closure date, and what is the due date of AGM, first AGM. Sufficient. Gatto Limited, dealing in colored contact lenses, is a company incorporated in Singapore, or company incorporated outside India. The said company is operating in India through its branch office in Kolkata. The company has approached its legal department to state relevant provisions of Companies Act 2013 and rules made thereunder relating to preparation and filing of financial statements in case of such company. So this is also a straight away theory question. Straight away theory descriptive question. So what are the documents a company has to file with? Company incorporated outside India has to file with a registrar. So section 381 list has been given. So what are the documents have to be filed with registrar? So theory question ma. Not practical question. Miss Prabha, a classical dancer of Bharatanatyam, wants to go to USA for a performance. In this connection, she requires foreign exchange drawal of 50,000 USD. Explain, Miss Prabha, the provisions of FEMA 1999 in respect of permission required for such withdrawal. This is related to culture, right? So current account transaction, prior approval of CG is required. The Ministry of Human Resources Development is the concerned ministry to approve this transaction. Their Department of Education and Culture is there. That department has to give approval. Only with that approval you can withdraw foreign money for carrying this transaction. So with this, mock test paper is completed. And don't forget at the question paper pattern. So looking at this question paper pattern, the number of descriptive questions increased, right? Previously 5 out of 5 you need to write 4, and right now we are having 6. Out of 6 you need to attempt 5, and in each question we are able to find 4 questions. 4 sub questions are there. Understood? Multiple choice questions, yes, the number has been reduced. Previously few multiple questions came for 2 marks and remaining came for 1 marks, but right now 15 MCQs, each MCQ 2 marks. I hope the same pattern will be continued in May 2024 examination. Why? Mock test paper is similar to main examination paper. So with this, I conclude my discussion. All the best for your exams.